where we are after our lunch hour. So the bullish trend continued. Not only did it continue after we had our discussion and we dropped off just after 11:15, but it also continued through the lunch hour. We now see some consolidation here. Reached the lunch high from yesterday. Swept all the highs from this morning. So there's the Asia high taken out, London high as well. There's a bullish breaker on the 1 minute. Let's watch this level here. Just been broken to the downside. Let's see if it closes below. If it does, we could see our trend end and could see prices start delivering lower than it currently is. Didn't realize the light wasn't on. There we go. That's better. Okay, so we do have a closure below. More. Hey, Robin. Good afternoon. Let's do this. Yeah, I saw that the breaker was just too large of a range. It was about 80 handles of a range. And since we do have this one candle here the breaking the trend of the pattern here. So we just took the last up close candle. I'm sorry, the last down close candle was the breaker. And so that would be the 1251 here on the 3 minute. If I move back up to the 5, maybe it's the same. Nope. So that could have been a quick 1-to-1 trade because it's already delivered 30 handles there. Obviously, I was late in identifying this, but anyone who was up to the minute and identified it as we had this candle trade below and close below the swing low over here, the swing low from 1251 at 19,300. That could have been a nice little entry now, which would have delivered about almost 50 handles so far. Not a lot. You need a save. J stock, do you know why you're down? Have you identified where you could have maybe analyzed the situation differently? Yeah, I know, Robin. I'm not sure it's going to deliver. I thought it might do a 1 to 2 because I was looking at a 30-point stop loss, but it's delivered 50 handles, and 50 is quite a lot considering just a one trade because I usually look for only 30. Oh, stop losses. Okay. Yeah. So what I've noticed, I've been gone from the market for a couple weeks, and this is my first week back. This week, what I've noticed is there have been lots of back and forth with long wicks. So when you just look at like the way price has been delivered earlier, like there are long wicks all over the place. Price is going back and forth. As you can really tell here on the 3 minute, but even here, right? Depending on where you get in, the next candle retraces nearly all the way down in multiple cases. And so tight stop losses hasn't really worked this week if that was something that you were looking to put into your trades. I mean, because I know some people like to have stop losses under 10 handles. Um, and this week, it doesn't look like that would have been beneficial. I typically have stop losses around 20. 30 is about the upper extremity, but those don't make me that comfortable. Plus, you can only go in with one contract when the stop loss is that large. But Jay Stock, have you found that you're on at least on side? Your trades are in the same direction as the momentum of the candles. Yeah. Okay, that's excellent. At least you're on sides and you know where things are going. You just want to work on getting in at the best possible entry. I know early on in my trading when I was on side but lost a lot of trades, it was because I was impatient about my entry. I would select where I thought an entry should be, and before it got there, I would just jump in thinking that, oh, it might leave without me or it may not go exactly to my entry. And I had to get to the point where I say, if it doesn't make it to my entry, then this is not my trade. And until I did that, I consistently was into trades 10 handles too soon. So even when it did retrace back down to where I thought I wanted to get in at, I was already down 10 handles, which psychologically put me in a bad position. So you want to make sure that you identify where trades should begin, where you should be entering. And if you're late, just understand you're late and try to catch the next one. Or if you're early, um, make sure that you're being patient and wait for it to actually retrace to your entry where you need it at. Because ultimately your stop loss is placed based on your risk model, and you know how much risk you can handle. Some people sweat when they're down 10 handles. Other people, they put in another entry and double down. So you know what type of trader you are, and make sure that you are entering exactly where you need to. So just be patient. Go ahead and let's jump in and take a look at the comparison chart that we normally take a look at. Let's just look and see where we are, what happened during lunch. So we can see at the beginning of this hour on the dollar. So during lunch or last few hours, we have seen price retrace down as we were obviously bullish on the indices. But opening up this hour, we were initially bearish. Price traded into these bullish fair value gaps below that we've seen price bounce from twice. Yesterday around lunchtime, price bounced out of this area. And then we also saw during the London session this morning, it retraced even deeper, but still bounced out of that area. So now we see it a third time this hour so far, and it's showing a bullish candle so far. With that being said, then we expect the inverse relationship for indices. So we're expecting them to be bearish, and that is exactly what we're getting. All three traded into bearish fair value gaps above on the hourly time frame. And we saw rejections out of all three indices to the downside. How far will it go? We'll see. We'll keep monitoring. Obviously, Nasdaq from this morning is the weaker of the three, the Dow, because the Dow never swept this low. Right here, it looks like it swept it or it was equal lows, but it's actually, if I zoom in, you'll see it didn't quite make it there. And so it didn't sweep lows this morning. It was the only indice not to do so, and it immediately turned bullish. And so we were looking to see if the others would follow, and they did follow suit, but they all retraced much deeper, sweeping this low and then sweeping this low as well from the London session. And so now as we see retracements back from the bullish leg that we just experienced, we can see that it did take out some swing highs, which is a good thing. So what you want to do now is you want to take a measurement from the lowest point to the most recent point where we now see the retracement, and then we want to see how far down we go, whether we can get back down to discount, which looks like it's around 137 for Nasdaq. So we would have another 100 handles to go if it wants to retrace a discount. It doesn't always retrace a discount. A lot of times you'll see it go down to 38%. So that's still around 19,200. And so when it gets to 19,200, start looking to see if it wants to turn around. If it doesn't, and you see it continue to push lower, then you take another peek when it gets around 19,140, 19,135. Or it could continue. I mean, it could just continue running up without retracing at all. So there is no guarantee that it will retrace. But when it is retracing, you first check at 38% and then at 50%, and you keep going down until you see a reversal pattern. I'm going to reuse this lunch high from yesterday, pull this over, make this the lunch high up today. Right, we had a lunch low, but that lunch low has already been taken. The lunch low was here. And as soon as 130 hit, it took out the lunch low. So I'm not sure we're going to get down to 240. We'll see. Sometimes what it'll do is it'll take the lunch low and it'll reverse course and go for the other direction, especially since it didn't close below. We're tagged in a trade, then after we profit, then we break even. Um, yep. Hey, Ray, good afternoon. Mohammed, I'm not sure what your question is. Um, if you're tagged in a trade and it's in profit, but then it turns around and it comes back to break even, then that's your stop loss. TP is when it closes your trade at profit. Yeah, it's been a crazy day, Ray. 350 points down and 350 points back up. It's not something you see every day. Hmm. Good advice, Captain. Yeah, the macro period a lot of times will give you the time that you should be looking to enter. Mm, my gut tells me that yes, we do spring back up at some point, but not immediately. I think we have more retracing to do. Yeah, 15-minute here. I feel like this is the 5. Yep, it's 5 minutes. Here on the 1 minute. Relative equal lows here, all the way down to 245. Okay, Bryce. Yeah, I appreciate that. The new day. Yeah, I'm watching the new day opening gap. We keep trading kind of above and below it. Just looking to see where the candles close. In fact, let me just throw it up on the screen here. There it is in yellow, the new day opening gap. Yes, it is. It's called NWOG, NDOG. So it put in the new week and the new day opening gap on there for you. And then you just decide how many. So in the new week, I have the last 4. So I have the last month worth of new week opening gaps. And on the new day opening gap, I only have the last 7 trading days. But yep, this indicator, it works. All right, we now have impulse being pushed out of the midnight open above the new week, the new day opening gap. Last leg up from basically 135, about 145. And we saw retracement down. Now the wick got almost down to 100% retracement, but the candle body set right around 70.8%. And now as far as the candle body is concerned, you can see it's the declining highs here, lower highs on the candle bodies, and higher lows on the candle bodies. So at some point in this area, we're gonna either going higher or lower. We can't just keep going sideways. Break the trend. Nope, not yet. Rejection out of the bearish breaker here. Need 245. It's all right, ace. 304 was overnight high. J stock, what fair value gap are you referring to? Another 30 handles out of the breaker. Back down to the midnight open / new day opening gap. Last entry out of the breaker was this candle here. 1321 candles. Delivered 50 handles. See if this one delivers 60. So it did. Appreciate that, Robin. Get back and see where we are as far as retracement is concerned. Yep, still need to get down to about 200. Macro's over now. Oh, okay, Bryce, I see. Okay, so you were going for like consequent encroachment here, somewhere around 315. Let's see. Uh, yeah, J stock. It's not that simple, where it's just entry after entry after entry. You got to get to the point to where you're looking for one or two entries per session, and that's about all you're going to be looking for. Otherwise, you're over trading. I'll look and see if I find another one that I like. Right now, I'm looking to see if price makes it down to 19,200 before we look for it to turn around. So I'm looking for it to get back into this bullish breaker here, and we're almost there now. But we got a 75-point push out of this breaker. Got, I think it was 50 points the first go, or 55 points, and now 75 on this one. So that's already um, two for this session. I'll look and see what else I can find. Hey, RPG, what's up? Yeah, Miles, I agree. I mean, there are different style traders, and scalpers are obviously going to take many more trades in a session. But taking unicorn setup or breaker block setup, try not to overtrade and look for one or two setups in a session. If you want to, I mean, if you want to take more than that, I mean, that's completely up to you. I just find that most people, by doing so, you end up just overtrading. But Jay Stocks he is looking for, he or she, not sure what the sex, but is looking for an entry. So you're taking many more trades than that, you can help them out. Right, another thing to consider, the market this morning delivered 300 handles to the downside and then 350 back up. So at some point, it's going to start consolidating, or some of the setups that have been working are going to fail. So just keep that in mind this afternoon as we look at the market, is that it may have already delivered what it wants to for the day. Yeah, price under trading can be a thing. Mostly being afraid of risk. Yeah, it's tough to win in trading if you're afraid of risk. If you find that you're under trading, or you find trading too risky, or um, yeah, you're looking for perfection on the candlesticks, just as when the session's over each day, just go back through the session and back test all the different setups that you saw. Try and identify the ones that worked out, the ones that you didn't like particularly, and then what about them didn't you like, and then the fact that they did work out, and try to find some commonalities, so you can gain some comfort in whatever the range is that you're looking for as a TP, or some of the variations that, even though it may not look perfect, it still works out for you. All right, on the retracement, Dow and S&P have already retraced 38%. We're still waiting to see if Nasdaq can get to the 38% retracement, which is at the 19,200 level. Yep, you're right. The low of the lunch hour has been taken on ES, and we are trying to get there. Well, actually, we took it as well. We did take it. We took the lunch low, because the lunch low was, oh, no, I was incorrect. I drew it up wrong. Mistake. I think I had drew it on this candle, which was the 1210 candle. It should have been here. So the lunch low is still open. Yeah, my apologies for that blunder. All right, J stock, this is an area where we'll start looking to see if there's going to be some sort of bullish entry model if price wants to turn around. Second, find a little breaker. See if it built out of there. Here goes your breaker on the 30-second. Sure, go ahead. Why don't you use a black background? Just easy on the eye. Stress. Um, I guess probably because it's not causing this the level of stress you're feeling. I'm not feeling. Maybe because I've always used a white background. It's always worked well for me. In fact, it's actually the lighter shade of gray. It's not even white. But I agree, it's on the lighter side that's causing stress for you. Yeah. I don't know what to say. I mean, I don't want to tell you to go find a trader that has a black background, but I do like my background. I already changed my candlesticks because everyone complained that the black and red needed to be the orientation that they wanted it to be. So, I mean, can't please everyone. And sorry, it's causing you stress. Oh, so, Neil, I don't really know what to tell you other than I'm going to use this background. So if you can work around it and still follow me, then great. If not, then there are some other traders you can probably follow. Hey, Slim, what's up? All right, J Stock, there's 30 handles right there. Did you take this entry? Oh, yeah, I'm good. I'm good, Slim. Doing well. Finally got over the cold I was dealing with. So it's a little easier to sleep at night without being heavily congested. I'm doing well. Change the brightness. J Stock, you still there? Johan, I just pointed out two separate trades this session already. We took the bearish breaker up here down to 240. And I said I wasn't looking for anything else until it got to 200, and I wanted to see what it did at 200. When we got down to 200, I dropped down to lower time frame, found bullish breakers on the 15-second and the 30-second, highlighted both of them coming out of this area right here. And that was in the last 6 or 7 minutes. It determines which buy candle will give you a breakout and won't, not a fake out. Not sure. You mean how do I determine if a breaker is going to be a fake one? Or yeah, I try to take them in situations where there's more support than just a breaker. So for instance, if there's a bullish breaker, I try to find a bullish breaker right around or on top of a bullish fair value gap on the 1 hour. So you find some type of confluence that gives you more confidence. Or in this case, it just came down and made an equal low with the lunch low. So then when we got an impulse candle out, we're already in a bullish breaker, a bullish 5-minute breaker from earlier, right? So that's an area where I would look for price to turn around. Then it went and took some liquidity, the lunch low. So I'm looking for price to turn around. When we got an impulse, then I look for whether there was a 15 or 30 second, some smaller time frame to show that we are actually going to bounce out of here. Now, the fact that we have equal lows tells me that this might be short-lived, and then we can come down and sweep these lows. Now, how far will it go down? I'm not sure. You then would, again, since this is a 5-minute breaker, you want to go a lower time frame, 1 minute or 30 seconds or so, and you look for another bullish breaker to then take you out of here again. If you don't get it, you'll see price continue to melt down. So usually look for 2 or 3 different influences that all point in the same direction, not just a breaker. Yep, no worry, Johan. So Johan, here on the 3-minute, we're on the 3-minute earlier, where we identify this as the bearish breaker. That is the last down close candle, because originally I was looking at this as the breaker, but this range is like 80 points or something. It's too large. So I wanted to narrow it down, and since we had this up close candle in the middle, I just took the last candle below and just said, all right, so this will be my bearish breaker. We had price break to the upside, hit a bearish fair value gap, reject out of it, pushing lower, closing below this low here, closing below, trading right back in, and then pushing lower for 50 handles. Then later on, as we got to 2 o'clock, it traded right back into it. And this time it didn't push down for 50. It pushed down for 100, down to the lunch low. So that was the first one. It gave 2 entries here at 1321 and at 1357. And then, as I just mentioned, when we got down here and we equaled the lunch low and pushed out of it, then I looked for the 15 and the 30 second and found a bullish breaker to then take it up for 30 handles there. Now, I didn't enter that trade, but there was a member in the group who was saying after he missed the move down, he asked for another trade. And so I just pointed this out as a bullish move up if you wanted to take it. Now we'll see what happens once the lunch low is taken. Let's see where we are. See no confirmed breaker on the 1 minute yet. Oops, 30 seconds. So 30-second was here. Let's see. Oh, okay. First minute, excellent. Swanil, trading higher time frame does seem to be a higher probability. It just depends on which higher time frame you're talking about. It will limit how many trades you can take. Trading on the 1 hour or the 4 hour, you may get one or two trades a week. So it just depends on which one you want to use. You say, does it have to be a down close candle or can a swing low suffice? Um, Typically, yeah, it just has to be a swing low, but typically it's going to be a down close candle. But I see what you're saying, Dane. Low looks like it's going to be taken soon. There it is. Lunch low now taken. Oops, let's get back up to the 5 minutes. Sorry about that. We'll look and see if we can find a bullish breaker if we're looking for prices to go higher. Or you find a bearish breaker if you're looking for prices to go lower. Depends on your bias, where you think liquidity needs to be taken next. We've gotten to the 38% retracement of the daily range. We're now looking for getting down to discount. That's down at 136. So we got a little ways to go if we're looking for 50% retracement. Mm. Yep. Which candles you're talking about, Slim? I think I know what you're talking about. And the answer would be yes. It's very similar to this. When this low was swept, this swing low was swept here, that became a bearish breaker. So these would be the same. Yep. Oh, you're talking about here. I think I understand. You're talking about this. Is this what you're referring to? Yep. Yep. It did. Absolutely. So you just have a bearish breaker on top of a bullish one. So you got to decide how you want to trade that. Whether you want to let price kind of figure it out before you enter, or whether you want to jump in because you have an idea of where liquidity is going to be taken next. Actually, you know what? This is not a swing point. There's no, yeah, this is one of those weird ones where, yeah, it's technically a swing low, but if you look at the highs, it's just a trend downwards. Oh wow, all the way down to the 830 open. Okay, did we? Yep, we just crossed 50% retracement. So the other two indices are around 62% and Nasdaq's at 50. So they're all in discount now. If they want to turn around, they're in a good spot to do so. But if not, then they can just continue down south. Yeah, it's been a lot of volatility today. So if you just look at the way prices moved, I mean, yeah, I can't remember many days for it to move this much. 350 down, then 350 back up. So you're already talking about 700 handles in a day on two long moves in a morning session. And now we've already pushed lower 250 this session, this afternoon. So yeah, we're talking about almost 1,000 handles in movement today. Yep. Oh no, it's good. I mean, if as a trader, that's all you can ask for. If you got that every single day or every other day, as a trader, you'd be extremely happy. Macro now, forgot about that. Oh, okay. PCE combined with earnings season volatility. Okay. Thanks for that, Ray. I didn't realize that was the Fed's preferred inflation metric. quick peek and see. Yeah, core PCE price index month over month, 8:30 tomorrow morning. So let's keep our eyes open for that. That's the high impact news driver for tomorrow, 8:30 tomorrow morning. Well, but Johan, you took 30, and 30 is not too bad. Yeah, that would be nice if it formed a bullish breaker. I'm watching just to see what it does. You get a short little market maker model running back up to 250. Sorry, not a short, but a quick market maker model here. All right, here we are, power hour. If we get a trade above here. And I want to push a little higher so you can leave a fair value gap. There we go. Go up and clear some of this area and then retrace. What? If I had a crystal ball, that's what I would do. $25. Yeah, that's not too tough. All right, looks like it wants to push lower. This would have been the bullish breaker here. All right, so there was no fair value gap here. Let's see if we can get one right here. Negative. All right, Robin, we will catch you tomorrow. You'll do better. Don't worry about it. Yep. Absolutely. And we keep getting better day after day. So take care. Don't beat yourself up too bad. Create a little trend line for ourselves. Oh, okay. Got it. Okay. So at the very end, you got back on track and you now know where your mistakes were. Okay. Sounds good, Robin. And good recovery. Glad you were able to get back, be positive again for the day. And yeah, we'll catch you tomorrow. All right, that ends our macro. And it did not hold up. I'll stay on till 3:30 today, so we'll have another 15 minutes. We'll see if we get an entry or something in the next 15. Oh, too tight. Yeah. Yeah, look at these wicks here. It's getting everybody on both sides. So if your stop loss is too tight, it's coming to get you. And I've noticed that to be a trademark of the 3 o'clock hour. It said even if you can identify where price is going, it makes sure that unless you're willing to risk something, it won't let you catch on. Yeah, it's definitely leaning that way, Johan, for sure. I know earlier when I looked at the higher time frame at the 1 hour, maybe it's on the 15 minute as well. Check. No, not so much. But on the hour, you got this long wick here. And so price is going to want to trade into that, whether it's today or someday in the future. But you got a wick that's the size of 120 handles. Yep. But right now, you have all the indices positive for bullish so far this hour, but the dollar is as well. So go figure. Yeah, whenever you don't have that inverse relationship, it's gonna be tough trading. You're gonna what they call high resistance liquidity runs. So either a lot of back and forth or some long wicks. And after, like I said, price has already moved over 1,000 handles for the day. So I'm not too optimistic about what it'll give that last hour. Yeah, if you get a push to the upside, you do have equal highs right here, which is pretty easy target. It's not too far away. Well, actually, it is far away. It's about 100 handles. That's because, I mean, it's been so much movement today that you look at one little price run, you look at sweeping a high, and you realize you're 100 handles away. Based on what I'm looking at now, these impulse candles here, I think this could be in the crosshairs. On the 1 minute, looks like a market maker buy model. Because you have your first target was there, second target here, and then final one here. So cross over the first target, retrace, kind of consolidated a bit. Next leg of expansion. Let's see if we now get over 219. It may retrace back down to here. And then see if you get to your third leg of 250 or 245. Stop loss got you again. It's okay, Slim. Just maybe your next couple trades, switch over to demo, give yourself a larger stop loss, and see how that feels. See if you can handle it. All right, there's the second target grabbed. Let's see if it retraces a little bit, or if it just goes straight for 245. Right, inverse relationships working again, with the dollar pushing lower, and all the indices are just taking off in the last 10 minutes. Yep, another good idea from Brian. Switch over to micros, so you can each point will be worth less, but you can extend your stop loss so you can stay in the trade. All right, so it's reached that level now on the 1 minute. Now, if you're watching on the 5 minute, you obviously have bullish breaker here. With an inversion gap. Let's see if that holds. There. And depending on how this candle closes, you should have that's too low. We'll look for the next candle. All right, so it looks like it's going to fail to close above. We got 1 minute remaining on this 5 minute candle, so we'll see what happens. But not surprising that we're getting a retracement here. So maybe the following candle will trade above and close. But if it does, if you do get a 5 minute candle that trades above and closes, then obviously you have a bullish breaker here that's confirmed, and you can look to extend that, taking that up to the next level at 299, 300, or somewhere higher back up to the bearish fair value gap. But also we got to remember we have the bearish breaker here, so let's keep that in mind. So yeah, if you do end up getting a bullish breaker here and you take an entry, be careful when you get to 19,300. Just be aware. All right, unless there are any final questions, that'll do it for our session today. It's now 3:30. Let's see. Took an entry long at 195, stop at 185. Yep. 15 seconds, 2 micros. When I held a little longer, it was a good run though. Okay. Excellent. Good job, Johan. All right. Any final questions, comments? I appreciate it, Brian. El Jefe. All right, everyone. Have a good rest of your afternoon or evening, depending on where you are in the world. And we'll be at it tomorrow morning, 9:15. Till then, take care, everyone. Oh, sorry. Sorry, I didn't realize Johan asked another question. Go ahead and address that. Would you wait for a deeper retracement to take an entry? What I would do, Johan, if I wanted to go long, always pull your Fibonacci. Try to catch a, because you're looking for low risk. So you catch something in discount. Try to catch something around 19,177 or below. So when it gets down to 19,177, then look and see if you see an impulse to the upside. Go from there. But on the 1 minute, the market maker buy model, I had it concluding at 245. So it made it there. So whether it goes higher or not, I'm not sure. What you also can do is just wait for it to trade higher above and confirm this breaker. Once it trades higher and closes, then wait for the retracement into the breaker and then take it for another extension. So there's two options for you. Right. All right, guys. Take care.